Welcome to Explain the Charts, where we break down the news and the charts for you to help you make informed trading decisions. Today is October 17th, 2024, and we're looking at the US Dollar Swiss Franc, or USDCHF, and what the charts are telling us in the current market environment. Recent news surrounding the USDCHF has been mixed, with some analysts predicting a bullish trend based on the strong US dollar and China's recent stimulus measures, while others are more cautious, citing the potential for a correction in the pair due to overbought conditions. The Swiss National Bank (SNB) has been hinting at further rate cuts, which could weaken the Swiss franc and further bolster the USDCHF. In addition to the SNB's rate cuts, the US dollar is receiving support from the expectation of modest interest rate cuts by the Federal Reserve (Fed) in the coming year. The benchmark 10-year US government bond yield is also remaining above 4%, further supporting the US dollar and the USDCHF pair. Now, let's look at the chart data to see how it correlates with the recent news. When we examine the daily chart, we can see that the USDCHF has been in an uptrend in recent months. The pair has broken above its 50-day simple moving average, SMA, and is currently trading near its 2-month high. This suggests that the USDCHF is likely to continue its bullish momentum, at least in the short term. However, we can also see that the RSI momentum indicator shows bearish divergence with price, potentially suggesting mild underlying weakness. This divergence could lead to a pullback in the USDCHF, which could offer a buying opportunity for traders. Let's zoom in on the 1-hour chart to get a clearer picture of the potential pullback. On the 1-hour chart, we can see that the USDCHF has been consolidating in a narrow range for the past few days. This consolidation is likely due to traders waiting for the release of key U.S. economic data, including retail sales, weekly initial jobless claims, the Philly Fed Manufacturing Index, and industrial production figures. This data could provide clues about the Fed's rate cut timeline, which will impact USD demand and short-term opportunities around the USDCHF pair. The market focus will shift to Chinese macro data, including the third-quarter GDP report on Friday, which could influence broader risk sentiment and the direction of the USDCHF. We can see a gap opened on Monday, potentially leading to a correction down to 0.8574. The USDCHF has recently broken above its 38.2% retracement of the move down from the early July high. The price also surpassed a swing area between 0.86078 and 0.8619, considered a more conservative risk level for buyers. Maintaining this position above the swing area is bullish, while falling below it could disappoint buyers and lead to them exiting positions. The next target for buyers is the 50% midpoint of the same move lower, located at 0.87108, presenting potential for continued upside momentum. A break below 0.8541 would confirm a probable change of trend. Now, let's take a look at the 15-minute chart for a more granular view of the price action. The 15-minute chart shows that the USDCHF has been consolidating in a range for the past few hours. The price is currently bouncing between the 0.8620 and 0.8630 levels, which are likely acting as support and resistance levels. A break above 0.8630 could signal a continuation of the uptrend, while a break below 0.8620 could indicate a pullback. It's important to note that the market is likely to be more volatile in the near term due to the upcoming release of economic data. Traders should be cautious and use appropriate risk management strategies. To recap, the USDCHF has been in an uptrend in recent months and is currently trading near its 2-month high. The pair has broken above its 50-day SMA, but the RSI indicator shows bearish divergence with price. This suggests that the USDCHF could experience a pullback in the near term, which could offer a buying opportunity. The 1-hour chart shows consolidation in a narrow range, likely due to traders awaiting the release of U.S. economic data. The 15-minute chart shows consolidation between 0.8620 and 0.8630, with a break above 0.8630 signaling a continuation of the uptrend and a break below 0.8620 indicating a pullback. Key price levels to watch include the 0.8574 support level, the 0.86078 to 0.8619 swing area, the 0.8630 resistance level, and the 0.87108 target for buyers. The USDCHF is likely to remain volatile in the near term, with the release of U.S. economic data and Chinese macro data potentially influencing price action. Traders should be cautious and use appropriate risk management strategies. Remember, this is just a technical analysis, and past performance is not indicative of future results. Always do your own research and consult with a financial advisor before making any investment decisions. Thanks for watching, and be sure to subscribe to Explain the Charts for more in-depth analysis of the markets.